if you have a balanced portfolio, then you don't worry about the daily, monthly, even the yearly fluctuations of silver. You're prepped up and ready to go regardless. But that's not how most people invest. They get
And
emotional, they see the light, they jump in, they buy the wrong kind or too much at the wrong time, and then they regret it.
I am delighted to welcome back to the channel somebody who is the author of the Morgan Report. He is known as the Silver Guru, but he's also a thorough gentleman of the precious metals market. David Morgan, welcome back to the channel.
Well, thank you. It's good to be back with you, Dave. Appreciate it.
You're very welcome. Always great to have you. Always full of information. Let's just start broad on this one. Silver's in a bull market at the moment. We've taken a little bit of a breather after a decent run up at the beginning of the year. We have been moving sideways for the last month or so. Are we set to continue sideways through the summer? Or are we looking for this bull market to continue? And if so, when?
Yes, I've been saying for some time now that we're in a consolidation phase and we will be in a trading range probably through the whole summer. And I expect to see a breakout in the fall. When exactly, what day, I don't know. But that's normal for bull markets to, make a big run and then what we say consolidate the gains and then, kind of stall, maybe go sideways, maybe slightly down, and then move forward. It's interesting is that we had so much sell back in the States. I'm not sure what you guys did around the 30, 31 level. And what's interesting about a bull market is those people that sell at say 31 and then it trades 29, 28, which you did recently, they're kind of patting themselves on the back. Well, I bought it at 30 in 2011 and now I got 30 for it and I'm out and I never want to hear the word silver again. And then it goes down a couple bucks and they're feeling really, really good. And then after the consolidation, it moves up, and the next thing we're in a 35, 40 handle, and they're wishing, well, maybe I shouldn't have sold. But those people usually don't come back into the market. And that's okay. It's just how markets move. And there'll be somebody that doesn't know anything about the silver. Here's, maybe our conversation buys it at, 42, which is like the highest it's been since the 1980s. And he holds it all the way to, within 2 days of the top and makes a fortune. And he's only been in the market for 2 years, while this other person waited for 12 or 13 just to break even. But that's how markets move. And that's what drives people nuts. And I get it. And that's why I try as hard as I can to teach people that there's the right amount for everybody. In other words, if you have a balanced portfolio, then you don't worry about the daily, monthly, even the yearly fluctuations of silver. You're prepped up and ready to go regardless. But that's not how most people invest. They get
And
emotional, they see the light, they jump in, they buy the wrong kind or too much at the wrong time, and then they regret it.
you touched on something there, and obviously there are a lot of people who have been long silver for a long time, and when they see that breaking the 30, they sell out. You and I follow the silver markets very closely. It's what we do professionally. Do you think that there is a broad understanding of the investment case for silver outside of those that are already watching the silver market that closely?
Absolutely not. I mean, the the low case for silver, which I've shown on a couple of videos, is basically from 2023 onward. We're in a structural deficit that will last probably for a decade or more due to industrial demand alone. So if you go with some silverware, which isn't a big part of the market, jewelry, which is fairly substantial, and investment demand, those demands can only be met by the above ground stockpile. And you go out about 5 years and the deficit's projected to be like 450 million ounces on an annual basis. Well, if we look at the above ground stockpile, which a lot of it's in strong hands, and that's 2 billion ounces, you're looking at 4 years. And in theory, you've eaten up all the above ground silver. Now, that'll never happen. But the idea being that as the industrial man continues to move forward and increase, I think that the investment demand will also increase. And that's really not accounted for in this low case silver demand going forward. So I think if any fund manager, any money manager, any pension fund guy, any sophisticated investor, anybody that knows the meaning of why you have to have precious metals in a portfolio to balance it the best for best performance, any certified financial planner that actually does critical thinking on their own, any of those people that would see this logic would almost be required to move into the precious metals, particularly silver. But that's not the case because it's overlooked, generally speaking, by the mainstream, which is, 98.2%. I mean, I'll have to go one step further, Dave. I'll give it back to you. But if you look at what the financial wherewithal of the gold market is, you're looking at maybe 1.5% of the global market. That's nothing. But silver's 0.02%. I mean, it's a rounding error. But that's good and bad. It's such a small market that any new awareness into it can really move the market. And I think we started that not by North America, not by Europe, but by China. It seems the Chinese retail investor is really starting to eye the silver market, and we've got this great arbitrage going on between this Shanghai Futures Exchange and Shanghai Gold Exchange and what the London market's quoting for prices of silver and gold.
You touch on there, obviously, the huge demand that is coming out of China, but also globally, which really stems from the photovoltaic demand. This is solar panel, basically, and the growth of solar panels and the growth of clean energy over the next number of years that is really going to make up a huge amount of that demand side of the argument. Are we in a situation where it's from a silver point of view that it's more the industrial story that's driving this than silver as a monetary metal going forward?
Absolutely. You go back two and a half decades, you go back 25 years, and the industrial side of the market was 35% of the market. Now it's about 60% of the market. So obviously the lion's share now is the industrial side. Still, it's a monetary metal, and as gold continues to move forward and gets to price levels that are hard to swallow for the average investor, you'll see more money move into the investment side of silver because it's more affordable. And that's what happened in the 1979, 1980 bull run in the silver and gold market, was that gold moving, kind of outside of the affordability range for a lot of people. And they saw what silver was doing. Plus, it was moving faster at the time. So a lot of the Johnny come latelys moved into the silver market. And I think we'll see the same thing. And especially if we see, the Chinese take the silver bit in their mouth, so to speak, and start to run with it. I mean, if they're worried about their currency, they're worried about really more of their real estate market, and also their distrust of government, like a lot of people worldwide are distrustful these days, and move into a tangible asset. You got to remember the Chinese were actually the last to go off the silver standard. That happened, I think it was 1935. I mean, it's not eons ago.
You talk about lack of trust in government. We're in you in the US are in an election year and a significant election. How do precious metals play out in an election year, but also given the current uncertainty that's surrounding the candidates?
I think uncertainty is a key word, Dave. Either side, whether you lean left, right, or centrist, it's more about not so much the candidates. I'll get to it in a second, but the uncertainty. Well, I'm not sure who's going to win, so maybe that would put a little more pressure to buy an asset like precious metals. On the other hand, going back into the 2016 election, and Mr. T won the election and was president for 4 years, our business really dropped off substantially. And the only way I can analyze that, trying to be objective, is that, well, Big Daddy's here. He's going to fix everything for me. Why do I need precious metals? Where, good times are here again. Things are great again. It's wonderful again. I should sell my, precious metals and just enjoy the party, which is really not thinking it through critically, because the economy is not run by the president of the United States, although they would allude to the fact that power exists. It really doesn't. It can have an effect, of course. I mean, depending on how you tax the oil market, for example, which is huge, it can affect, whether the economy is stronger or weaker, but they don't have as much power as the mainstream press and the financial press will tell you that they do. But it's all perception. If you perceive that good times here, well, why do we need metals now? And I really saw that. And then when the other side came in, did not see much growth. Still, wasn't changing the guard, didn't really wake people up. And I think that had to do more with the inflation rate getting so high that people that were able to pick up, stack, I don't know, make up a number, 10 coins a month or whatever, that went away. Those 10 coins went into food and groceries and, gasoline and their insurance premium that just went up 40%.
Then change tack for a second, because you would logically think that as we're seeing silver holding above $30 an ounce, that if you really wanted to take a leverage position on silver, the miners is where you should be. But if you look at the performance of miners over the last couple of years, they've been absolutely dire. Why is that? And is that something that's set to continue?
I don't think it's set to continue because you can't mint a silver coin without mining, but it's very frustrating and it's really unusual. I mean, I've been in this market well over 40 years, as you well know. And in almost all cases, the miners lead the metal. So what you see normally, especially in a bull market, is that the miners will take off for apparently no reason. And they start to catch a bid and there's more volume and they're buying. And then gold starts to move up and silver starts to move up. That's not the case. And the why is the big question. And my best guess is all the alternatives. I mean, anyone that manages money or runs a hedge fund is much more apt to buy an ETF or an ETP than they are a miner, or because the risk reward ratio is so much better and the liquidity is better. I mean, you could be in the Newmonts or the Barracks or Pan American Silver on the silver side that have pretty good liquidity. We're talking billion-dollar companies, but just the same, it's just easier for an ETF. So I think ETFs is a big answer to the why, but it's the best place to invest as far as I'm concerned. And yes, I'm biased. I mean, the Morgan report looks at the entire resource sector. We look at the metals, the precious metals more than any other sector, perhaps than uranium right now, because that's where I think the biggest gains are, the best action and the most value. We've looked at lithium and everything else, but back on track, we're talking metals today, precious metals. They're just really overlooked. And what's happened is you've got good margins now with $2,300, $2,400 gold. So all these algorithms that are out there sorting all stocks on the NYSE will sort by earnings, and they'll see, oh my goodness, the miners are coming up near the top third of all industries. And somebody that's, manages money will see that and go, oh, geez, I'm buying this, this mining company at a real value. So I really do think that better times are ahead for the miners, but it's been very, very difficult to look at what I know and seen in the past and be in a position we are right now. It's almost as if the miners just don't believe it. And yet I think the duration of this new bull market is long enough that it's proof that it's not a fake out, it is a breakout.